Okay, so we are short we're short Nasdaq 100 futures at 2010.25. Our stop is at 2013. This is our hard stop. At this point, there's nothing to do. Two things will happen: either your stop, either this hard stop will get hit, or we'll move down and we'll take profits. Our profit targets essentially will be hit. Until then, Apex tells us to sit on the trade and do nothing else. So we'll patiently do that. Okay, so now we've moved down. We're going to cover 1/3 here, and we will move our stop to break even. Again, it's just a matter of waiting for the other profit targets to get hit or to be achieved. This is moving down nicely, so we're gonna give it some room. I should point out that today, every day is different, so you have to have different expectations for your profit targets and trading. Simply put, one of the indicators that we use for any type of trading is this relative volume indicator below, which tells us the activity of today and compares that activity with prior days. When there are few market participants in the market, this relative volume ratio will be quite low, like it is on this day. And when it's high, it's like this day. High relative volume ratio days like that create these very sharp moves. There's a lot of the range expands. There's a lot of activity in the market, a lot of participants, so you can expect that on days like this. You really have to lower your expectations a little bit more. Okay, we're going to take another 10 here. Okay, so now we have 10 contracts, and I'm going to cover another 5. Okay, so was the level that I was concerned about was actually on the S&Ps, and it was at 1140, which was just a little bit. It was around, actually, I'll show you exactly in terms of time. It was right here where this green hammer tried to where this bullish hammer tried to form. Now, because it couldn't close higher and there was an inverted hammer before it, I didn't pay to. I just wanted to. I was watching S&P at the same time, so we're gonna let the trade go a little bit more. But again, now we've reached another level, and this level needs to be paid attention to as well. So essentially, so far, we're only sitting on 5 contracts with NQ, which NQ is like 20 bucks a point. So 5 contracts on NQ is pretty small position size. So up to this point, taken out about 24.75, not including what we have here. So that level isn't holding either. There's some really nice uh, volatility coming in again. So we'll just, and this is how you continue to manage your trade. Now, this is again extremely high volume spike here. So this is a very, very high volume spike here, particularly for this time of the day. So we'll pay attention to that and see what that does. And at the same time, what you could do when you understand what caused this price decline, what you can do is you can, if you have trending strategies, for example, I use the Z Kellner trending strategies because I understand what's going on here. I can also trade this on another instrument, this move down, just taking continuation trades. You can use, for example, on the S&Ps, I use a 1,000 share bar, or I could use a 1,000 tick bar, and that's just another way. What I would do is switch quickly to YM, and for example trade YM or the S&Ps on this trend, because I understand that where this trend is going, what caused it, and where it's potentially going to go to or stop. So here we're getting to a level of some importance here. We might snap back, but if we snap back, I'd like to see us stop around here, right above this, up here. So at this point, what you could do is, you have 5 contracts, you've got about $1,000. What you could do is take a couple more contracts out of that because you're at a level that there's a potential bounce, or you could just sit on it because you have a runner and you've already made a good amount of profit. And this is essentially a good demonstration of what the Apex strategies or the Zenith strategies are capable of. We like to get in on the turns. We anticipate high probability levels that the turns will form, and using that methodology, then we look for trades. We get into the trades. We have a defined stop, hard stop. See, when I first started out with this trade, my stop, I believe, was about 13. So it was about I think about $1,300. So I'm already about 34. So that's about three times. That's, and I got out early because I got out of a lot of my position earlier than I normally would because the volume was so low. Normally it would have held at least half of the trade up to this point. Instead, what I'm looking for is only about 1/6 of the position right now that I'm holding on to. In any case, this is a good demonstration of what the Apex is capable of, and I will just pause the video and see if we're going to hold this area, or if we can push below it. If we can push below it, then I'll hold. If not, we'll have to cover. Okay, so I've given it plenty of time, and NQ's not able to make a lower low. Ticks are not able to make a lower low, so it's time to cover. Now, it is possible that we continue to make one more move lower, and we can always trade continuations using trend strategy, so that's not a big deal. As you can see, that was a great little example of the Apex and what you could do with it, and how the strategies are designed. Also, I want to mention that these strategies are not automated because that's a frequent question we get. However, you could easily automate them if you want to, if you want to code them. We don't recommend automated trading unless you have a very good reason to do so. The reason for it is because when you do automated trading, you tend to rely on your computer to do all the work, and what happens, you end up being lazy, getting lazy, and not paying attention to the market. And when you do that, you don't truly learn what's needed to be a professional trader. And that is the main reason why we don't recommend automated trading. But we do provide you all the information. We don't want to make this into a black box system, so we provide you all the information so you could understand why you took this trade, why you took that trade, etc., and the reasons behind it. So if you do have a need to automate some of it, you could absolutely do that, as provided you have some coding capabilities.